Good morning, everyone. This is Ryan Ender with your Wednesday, November 14th morning market commentary. We'll start off in corn again here. It is still in the range. We went down to the bottom end of that recent range we've been talking about yesterday and found solid support, and again found support last night. We do want to start putting actually a little bit more focus into the crude oil market. That market has dropped $20 over the last month, and we'll want to see if that starts making an impact on the ethanol report. That report has remained strong, pretty much still right on the USDA expectations. We'll want to make sure it stays that way, even with this crude oil setback. So there could be a little bit more attention paid to tomorrow's ethanol report than normal. We'll again be looking for that to maintain the pace it's been on, but with a $20 crude oil slide, there could be a little bit concerned looking forward that report may slow down. Also seeing just fractional support from the fact that harvest came in at 84% when trade was expecting 87%. We still had to think for the most part trade is looking at any number in the 80s for corn harvest is done. But being a few percent slower than expected, we could see just light, maybe just fractional support there in the corn here. Same thing for harvest applies to beans. They were looking for 91% complete. It came in at 88%. Many people out there who are still working on harvest know that we're not quite done, but we still had to accept that as far as trade sees it, 88 is essentially done. But again, a little bit slower than expected pace may have been part of our help last night in that bean market for the overnight. The number one concern remains the G20 meeting at the end of the month. We do know that G20 meeting occurs the last week of November, with the major leaders expected to meet at the tail end of that meeting. No real new headlines to catch a lot of market attention in the beans yesterday regarding that meeting, but it's something we need to continue to watch out for every single day. That market is, our headlines have clearly shown that they are the number one influence, creating a larger move on that last 30-cent bounce from a U.S.-China headline than even the government report changing carry out 70 million bushels. Looking at the Jan beans here, because everybody's focusing on that upcoming meeting, nobody really seems to want to take a large position either way. Excluding the report, the January beans have been stuck between a range of 874 and 893. For beans, that's also quite a small range to be trading, similar to the corn. Moving over to the wheat, yesterday's 12-cent setback looked large on the chart, or looked large when you just saw the change and the daily change in the wheat, but didn't even erase the previous day's large-scale bounce. So that would still be seen as just a technical setback, even though it was on the sizable side. If you look at the Chicago wheat chart, it actually looks like that market is still grinding higher as a whole. It's volatile, but if you look at it over the last 2-3 weeks, it's been a slow grind higher. Of course, that's been helped out by the fact that we've had 3 strong weekly export sales reports in a row. So the question is now on Friday's export report, does it top 600,000 tons again? That is, once again, the magical number that trade likes to see to show that our demand is improving. Over in cattle, we got last week's average cash trade at 114.06. Yesterday, starting bids on a Tuesday were low, as we might expect that early in the week. They started at 110.50 in Nebraska. They did move up to 111.50. That does imply, of course, still a lower cash trade. That's the catch here, is that they are early bids. They can still move higher, but starting at 110.50, even 111.50 still implies $1 to $2 lower cash trade, when the show list earlier in the week might have suggested 50 cents to $1 higher. So we'll have to see what these bids do going forward. Yesterday's bounce appeared to be mainly led by the feeders. Jan feeders were up $3.25. It was tough to find too much direct news to link to that $3.25 bounce. For example, the feeder index was actually down 58 cents yesterday, and given that it's a Tuesday, we commonly don't see too much in the way of news for cattle, so that was quite the drastic move for the feeders. We saw that fats did follow, but they seem to follow a little bit reluctantly, given that fats were only up 75 cents on that large of a feeder bounce. And again, I'm sure that's tied to the low starting cash bid. So we'll have to see again, is there any follow through in the cattle here this morning, and do those bids improve as we go on through the week? So that'll be our main focus for right now. We'll see what we get through today. It could be a relatively calm trading day, especially for the cattle waiting for more bids. And beans, as always, watching out for more G20 headlines or any U.S.-China headlines. If you have any questions, you can always call us at 800-551-4626 or visit us on the web at allendale-inc.com.